Hello guys, welcome back to another video. Today we're actually going to be going over plans for the next bull run for crypto miners. So as we know, the bull run is probably predicted to happen after the halving in 2024. So this will probably be around a year after that or a year and a half after that in 2025 or 2026. So we're looking at around 1 to 2 years to actually come together with a plan for how to basically maximize our profits off everything when it comes to the actual bull run. So for us miners, it's kind of been hard in this unprofitability kind of times right now in the bear market. I know some cryptocurrencies like kaspa, dynex, flux even has been going up slightly. Even Lithium, Radiant and Nexa kind of went up a little bit. However, they dropped off as you can see there. But a lot of these new coins that are coming in have provided profits for a little bit for us, but they've been nowhere near the Ethereum level profits. So right now that's obviously expected, but in the future we are hoping to see way more profits from what we're mining right now, as in a yield sense. So the whole point is to stack basically all of these low market cap coins that we're seeing here. We did it with Casper coin. Now my recommendation would probably be dynex or any of these that I've listed here, and we'll go a little bit into the AI part of it in a minute. However, mining the yield of these coins, even if it's slightly unprofitable to a certain extent, is probably going to be the best plan if you still want to continue to GPU mine, or if you're FPGA mining slash ASIC mining. I know there's no ASICs for any of these yet, but there probably will be in the future, just like we saw with the progression of Casper coin. So if you're GPU mining, I'd say you're probably not going to be profitable for a while. However, you could go for yield on these coins if you want to right now, and that will probably bring in profits. Like even if dynex goes up to 200 million in market cap, that's still like a 4x on your money. So anything you mine right now, even if it's very unprofitable, will still have made a realized profit in the future. So that would be the plan if you're going to GPU mine. Now there are some other options out there that we're seeing kind of good profitability from right now, and these are the AI coins. So we got Claw AI, Near AI, and Vast AI. These are basically like renting and hosting companies with a coin back to it. So I know Claw and Near AI are coins back to it, but Vast AI, as we can see here, is not backed by a coin, I don't believe. However, when we're looking at this, it basically shows you that you can set up a computer to have remotely running, and then somebody can rent out that rig. Now we've seen from the Mining King recently, he talked about Verified making that bank almost $5 a day with a 3090 verified. So this could be Ethereum level profits, as it says there. However, it comes into a conversation of what this Vast AI is actually doing if you can look at what the actual miner is doing, because they could be mining cryptocurrency, but on the flip side, they could also be cracking into wallets or something like that. But I think we'll see over the next coming months that people will be starting to dive into this AI thing. And if you're new, or if you're at least at the start of it, you'll probably make a lot of profitability before more people jump onto it, and the profitability starts to lower down because there's more available. So there's more supply of GPUs to be rented out, so that's going to drive the price down, I guess. So if you're early onto these AI coins and you actually figured out a setup which allows you to be very profitable in terms of power, because you're going to be ultimately paying the power bill, and then it should in theory be covered by how much is being spent to rent out the rig that you have set up. So we could see an explosion in AI coins. I know we've already seen them go up a little bit, as you can see there. Near AI had a little bit of an up as well. So that could be a play for the future. I would say if you're going to look into it, probably tinker around with it, try to get the best settings possible, plus also build kind of the best working rig overall, as in just not the GPU, actual CPU, RAM, all of that stuff, because that will be used during the process of renting out the hardware. And onto the next bull run play, and this is going to be buying hardware. So over the past 18 months, we can see a chart of the 3060. It's come down from around $550 to around $350, so a decrease of $200. We can see it higher for the 3060. It was all the way up there, and same for the 3060 Ti. So we're seeing, this chart's a bit weird, but the 3070 as well, we're seeing a big decrease in the price of GPUs. And remember, The reason that the price of them was up was because they could be used to mine, so people were just reselling them like crazy. And right now, they've actually dropped down to relatively normal prices, and you can get some good deals online on eBay and stuff like that. You can get 3070 Ti's for around $250, $300, which is a good price right now. So overall, I think if we do have a next bull run, and this could be continued with the AI point, people are going to want hardware for this AI, whether it be through a cryptocurrency like Claw AI or Near AI, or through Vast AI kind of rig rentals. People will be wanting to use your hardware. So if you're buying into this hardware like 3070 Ti's, I wouldn't really recommend 3070s. I'd say 3090s or more powerfuls like the 40 series. Stuff like that could be a good investment right now because the hardware will be wanted in the future. And as I said, it's a long timeline. It's around 1.5 to 2 years. That's the timeline that we're going for. So we're stacking hardware right now, such as the GPUs, even CPUs to a certain extent, probably the AMD cards. Now, with specifically mining cards, people want to be as efficient as possible. And relatively, the most efficient cards are actually the AMD cards. I believe the 6000 series is the most efficient. The 7000 series hasn't really come out. We haven't really got benchmarks for that. But I believe that that will be very efficient as well. But right now, I think I would be buying into the 6000 series if you're potentially wanting to sell them off or potentially wanting to mine efficiently in the future. We're talking in the bull run or on the run up to the bull run. There's profits to be had if you're very efficient when mining. Another option that we do have is to actually just buy the hardware and not mine with it. This could be one of those plays where you just buy the hardware and then you just store it for a while and then sell it off, basically like scalpers would do. However, I wouldn't be doing this with GPUs. I would actually be doing this with ASICs. So as we can see here, we've got a bunch of ASICs that are profitable. Not many of them really are bringing in enough profits per day to be worthy of buying and mining on. However, the KS3 obviously has the profitability of around $100 a day. This is on 12 cents per kilowatt hour. Now that's just mining kaspa coin, and I wouldn't necessarily say you should invest in the kaspa coin ASICs right now. I would be mainly focusing on Bitcoin ASICs because Bitcoin's the one that's going to start this all off by going up, and then as soon as that goes up, people will want to mine it, and through that you can start selling the miners. So one of the best ways I would say to capitalize on any of that would be to actually put money into Bitcoin miners, something like the S19J or S19J Pro. As you can see here, we have the S19K Pro, and I believe that the chips on this, like the actual hardware chips, are the same as the S19J Pro. However, I don't actually know if that's verified, but somebody can leave it down in the comments if it is. As you can see here, these are going for $1,400, and this is getting a terahash of $136. Not exactly as profitable as we'd want it to. As I said, it's about efficiency. So you probably want to go for the most efficient miner that still has a very low price. If we look here, as you can see on the S21, they're not relatively expensive, but I personally wouldn't be going for anything over $1,000 to $2,000 just because it's a big risk. If you have the capital to do it, I'd probably go into buying the S21s right now. And in the bull run, people will be very focused on the hash rate and bringing in more Bitcoin because efficiency won't matter as much because the price of Bitcoin will be going up. So they'll be stacking more Bitcoin, if that makes sense. However, I really think that if you have the capital to expend on this, then I would put probably, a lot of it into ASIC miners, put them in a storage container or something like that. You could get 20 or 30 of them, depending on how much money you have. Even 1 or 2 is fine. But if you buy in bulk, they'll give you a better price on them. And these, I believe, like the S19J Pros were going for around $30,000 at the peak. So imagine this is at $3,000 now. That's basically a 10x on your money, even more, which is probably going to be more than what Bitcoin does in the next bull run. I'm predicting probably Bitcoin is going to hit up to 150,000, 180,000 at the maximum, which would be around 6 times what it is right now. So you could make a larger profit if you would just put the money into miners. Plus you could actually also mine on them and then sell them off, but you've got to do it at the right time. When the market's very high, that's when you want to really sell off all of your hardware, because you're going to make profitability either mining it, or you're going to sell off and you're going to make more profitability from that as well. So in the meantime, if you don't have any kind of capital to expend on any of these, I would just say that we should probably stack any of these coins that are very low market cap. I'm talking about Nexa, Radiant, Alephium, Octa has been very good. Ironfish, I don't know how that's going to play out with the new algorithm, but sure, it might be a good play. Claw AI, Nur AI, Raptorium's a maybe. However, even coins like Kaspa coin, I'd just say just do a DCA for the next year and a half into any of the coins that you see here. I'm mainly focused on proof of work coins. I don't really like proof of stake coins, so that's why they're not included in this video. However, I like proof of work coins, and I think they have the most potential right now. Just seeing what they're doing in the space, you know, Flux even has that proof of useful work that's coming in. So we could see a lot more profitability from these coins. But there are also going to be meme coins which go up. But when they go up, don't actually go for them. Stay with a project or coin that at least has the fundamentals and the technology behind it. So that's it for the video, guys. If you did enjoy, please leave a like and subscribe, and let me know in the comments what you think about this plan for the future. If you're going to take some advice from it and use it to put it into your own plan, leave them in the comments below.